Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB this Friday. I'm Juliette Sarli.
And I'm Andrew Gagan. Good to be with you again. And I've got to say, it feels like a really long week. And I'm saying that, and I was only here for 4 days.
I was only here for 4 days too, but I was actually saying that to the juice man, you know, where we get our half price yogurts after 3. We can't tell too many people in Barangaroo about that. But I just did. He was saying the same thing. Caro said it, one of our producers. It just to everyone has felt like a long week.
Maybe it's February. You know, you've got you come out of holidays in January and you hit February. But also, of course, has been a big week because Earnings, so many of them coming our way, and we'll get across to those in just a minute. But more broadly, how's the market look?
The market looks really good. It is up about 51 points on the ASX 200, 10 points there on the CBO 200. The ASX 200 actually crossing above its 20-day moving average for those that like a technical. It's at 7,657. But, you know, we did have a bit of a sell down earlier in the week, so I think we're going to end the last 5 days virtually unchanged.
All right. Well, better than negative, but a lot of that also driven by, well, obviously expectations on interest rates and what we're seeing in the Australian economy, but also obviously those earnings results as well. Yeah,
and it was a good Friday, as we mentioned. 9 of the 11 sectors higher, only consumer staples, and I think, I don't even know what the other one is, but most of them are higher. Materials really driving the gains today. And a lot of that as well on this mining support that the government announced for some of these nickel players.
Yeah, the nickel, because the nickel price has absolutely tanked, in part because of what we're seeing out of Indonesia. They're supplying cut price nickel, if you like, to the markets, and as a result, a lot of nickel miners here under extreme pressure. So yeah, Juliet, as you said, support coming from the government declaring it a critical mineral as such. And more broadly, we saw on the index today, the miners doing very well. Lithium miners, gold miners too, because the gold price lifted overnight.
Absolutely. So the material sector certainly the winner today, up 1.6%. I'm so used to saying laggard, I almost said it, but it is the leader. Winner, no chicken dinner though. You spoke to the Ingham's CEO.
Yeah, in fact, Ingham's had a good result for the half. However, it was all about the guidance. They're expecting the next half is not going to be as good. Obviously, we've got cost pressures, but also the consumer. Are they buying more chickens? Well, apparently they think that even though it's a bit of a staple, isn't it? Chicken.
It is. I was just telling Hiena, our technical director, I've got some chicken ready to be cooked in my fridge. Everybody likes chicken, but it's the cost of feed increasing, the cost of electricity, all of that weighing through on their costs, labour, etc. And as you say, if people aren't buying as much, or maybe people are going to meat-free Mondays and the like, then that is all weighing on it as well. Let's have a look at some of the stocks in detail. We mentioned the material sector is the front runner today. Having a look at some of those gains, very strong, particularly Northern Star. You mentioned those gold players looking really good. All
right, in the energy space, once again, also positive. We did see the oil price lift a little, but a lot of those stocks, including the big ones, Woodside, Santos, have been under pressure recently.
Looking at consumer staples, I mean, we spoke to Wesfarmers yesterday, the CEO. Woolies, Coles. Woolies is pretty flat there. Treasury Wine Estate. Is that a consumer staple? I think maybe on a Friday, Treasury Wine Estate is a consumer staple. Metcash.
It's a bit of a stretch, but all right, we'll take that.
It's certainly a staple in my household. Yeah. All right, to the insurers, IAG reaffirming annual guidance and launching a $200 million share buyback, but shares under pressure today.
Yeah, likewise, QBE Insurance full-year profit more than doubling to 1.36 billion, helped by higher premiums and lower claims, but its share also under pressure today.
I spoke to the Deterra Royalties CEO, Julian Andrews. They did report a 24% spike in first half net profit, and that was thanks to production from BHP's South Flank operation in WA, and shares there up 1.6%.
I caught up with Homeco Daly's chief executive also. He was talking about the resilience of that business, given they own a lot of convenience stores across the country, and Aussie's still spending essentially. I guess given those the staples that we were talking about.
Yeah, and I spoke to Pro Medicus. Look at us, just CEO name dropping here, but you can catch all these interviews on ausbiz as well. And they reported a 33% jump in net profit, sales up 30%, shares down 7.4%.
All right, well, welcome to one of our favourites here, particularly for a Friday. Shane Oliver joining us from AMP. Shane, a very good afternoon to you. Hope you've had a good week. Why don't we actually start with your observation, what you're seeing with corporate earnings at the moment. What's that telling you about the state of the Australian economy, do you think?
Well, the old saying is so far so good. We're early into the reporting season. I think we've seen just less than 40% of companies report. But generally speaking, they've been okay. Yes, retailers have been doing it tough, but maybe not quite as bad as expected. Maybe GB Hi-Fi was the highlight there. Guidance is not too bad. Investors generally have been prepared to look through the negatives, and that's why our markets managed to rise this week. So overall, it sort of looks okay, but we are going to see weakness, obviously, in energy stocks on the back of the big fall in energy prices, coal, oil, gas, after that boost they got a couple of years ago on the back of the Ukraine war. But yeah, it's sort of okay, but I'm a little bit cautious about getting too excited because it is early days, and it is often the case that good results tend to get reported early, and companies that have the better results tend to come on a bit later in the reporting season.
Let's talk about the overall economy. Of course, unemployment rising to a 2-year high, but still at these historically low levels. But we could see a bit of a boost to the retail space in the next couple of weeks. Andrew's as excited as I am about Swiftonomics, Shane.
It seems everyone's talking about that. The only thing I can relate to this as being similar was back in the 1970s. Tells you how old I am, when everyone was obsessed with ABBA. And every night I'd turn on Countdown and Fernando. It would be number one. It went on for weeks and weeks, months and months. And then, of course, when they came to Australia, it was a complete frenzy. Look, there is no doubt there's going to be a boost. My rough estimates were somewhere around $500, $600 million injected into the economy as a result of this concept. Similar numbers in other countries, obviously bigger in the US because many more concerts in the US. And that assumes that people not only buy the tickets, but there's spending associated with that on travel to Sydney and Melbourne, hotels, caterers, restaurants, and so on, and merchandise generally. So, yeah, there will be a boost, but by the same token, you've got to bear in mind that Taylor is an import. So a chunk of that will not stay in Australia, will go overseas. The spending on the tickets has already occurred, except in my case where I got an El Cheapo ticket, fortunately via a colleague on Tuesday, the $66 ticket, behind a pole or something like that. But nevertheless, I managed to get a ticket. Out of interest, people paid $3.70 to see the Beatles back in 1964, 60 years ago. If you adjust that for inflation, you would get about the same price I'm paying to see Taylor today, about $65. But she plays for 3 hours. They were 30 minutes. The sound quality back then would have been atrocious, I reckon. But anyway, I've digressed with all my excitement about getting a ticket, at least. But if you look at, so let's say 400 million stays in Australia of the spending, it's only 0.02% of our GDP. Our economy is 2.6 trillion. And of course, part of that spending has already occurred with the ticket sales back in July last year. So, yeah, I could see there probably will be a bit of a bounce in February, maybe even in the CPI, higher airfare prices perhaps. But I think it will be a pretty short blip. And so those who are worried about their mortgage rates going up, I think I would say to them, you need to calm down.
Well, Shane, good to see you're doing your bit as well. And who would have thought that Abernomics and Beatlenomics were a thing back in the day as well, but maybe this is a bigger beast that we're dealing with here. Shane, more broadly in the economy, as Juliet was referring to, given those jobs numbers we saw this week, we've already seen softer inflation, which is a positive. Retail has come off. There is obviously seasonality at play, given we're still sort of at the beginning of the year. How are you seeing the economy broadly tracking at the moment?
Look, I think it's still pretty soft, and we need to be cautious here. We have got news in the last day or so that Japan is in recession. They're often in recession, so you don't necessarily read too much into that. Their population is falling. But the UK has gone into recession. Europe is stagnant. these countries don't have the population boost we have, so that's a factor there. If we didn't have our population growth at the same level that it is, 2.5%, in the UK it's about 0.5%, that's a big difference. If we didn't have that, we probably would be in recession too. But it is just a warning here that there's still impacts from all the interest rate hikes and so on that are still feeding through. But bottom line, I think, is that we have seen some relatively softish retail sales numbers. Jobs numbers have come in on the soft side. Got to be a little bit careful there because of the seasonal issues associated with more people taking annual leave in January, more than normal people taking annual leave in January and in between jobs. So there could be a blip down in the unemployment rate for February. But it seems to me there's quite a clear uptrend in the unemployment rate. And the risk is that it gets above the 4.3% RBA forecast that they have for the end of the year. It could get above that in the next few months. So I think all of those things, we've probably still got an economy that's growing. GDP numbers probably still going to be positive at a headline level, but we've just got to be careful here. And on a per capita sense, we're probably still in a per capita recession, and the numbers, I think, are still going to be pretty subdued and ultimately consistent with the Reserve Bank cutting interest rates.
And speaking of recessions, I mean, Japan, England, just talk us through the broader macro picture from an international perspective as well.
Well, it's very diverse. You sort of saw that a little bit with a few weeks ago. The IMF released their global outlook for this year and next, and I think they revised up a little bit. So the big scare we were seeing a couple of years ago, the confronting, challenging numbers, as our Treasurer regularly referred to, weren't quite as bad. But still, you do have that huge diversity. The US been surprising on the upside. Europe, as I mentioned earlier, stagnant, and of course, as we've just learned, Japan and UK in recession. So it's pretty much a mixed bag. I think the global economy manages to continue to grow, but probably at a pace somewhat less than the IMF's talking about. And that tells us there are some risks for Australia. You don't want to read too much into Japan and the UK. They're different economies. They're not our biggest export. Well, Japan is, but it's still buying our stuff, even though it has slipped into recession. And this has been an on again, off again issue for the last few decades now in Japan. So I wouldn't necessarily worry too much about them. But obviously Europe and the UK is perhaps a bigger concern. So that's why we do need to be a little bit cautious here. And it's too early to say that we're out of the woods, to borrow again from Taylor Swift.
You're on a roll.
The peak in interest rates. We may have reached the peak in interest rates, but that consumer malaise is still there and still continuing. And I'm not hopeful that Taylor Swift will be enough to shake that off.
All right. Shane, if you keep this up, I'm expecting you to be singing these one-liners next week, all right?
I will be. Next Tuesday I go. Next Tuesday. This time next week will be the Friday before I go on the Tuesday. I go on the Monday, actually, Monday the 26th, I think it is.
You're the final show. I think you're a unicorn too, getting a $66 ticket. I don't know many people that were that lucky.
No, that sounds extraordinarily cheap.
Yeah.
Well, three of us were, you know, Deanna and I both missed out back in July. Our colleague, Mibu, we all logged on Tuesday, but she managed to get in. We didn't get in, and she managed to get us some tickets. So we owe her big time.
Mm.
Hey, well, Shane, I'm sure you'll enjoy it. Have a great time. And
we'll swap Swifty bracelets. Okay. I might see you there.
Gee, I'm feeling like I'm on the outer now.
I've heard about
missing out entirely.
I've got to start getting some.
Yeah.
Thanks very much, Shane.
Have a good weekend. Shane Oliver from AMP. Who knew he was a closet Swifty? He was coming out with all this.
He let us know last time, I think, or a couple of weeks ago when he was talking about.
I don't know if I was on that one, was I? Oh, if I was, sorry, Shane. All right, the stock of the day.
Pro Medicus, in fact, well, you spoke to Sam Pipette from Pro Medicus, but we got some analysis from Claude Walker from Rich Life and Luke Winchester from Merewether Capital on the stock.
Because the last time I bought, I looked up at it and it was about $28 something. And it felt so expensive then when I was buying it back then. So, and obviously my buy price is much higher than that now that I would buy it at. but we're not there yet. So for me, it's still a hold.
I've said hold on this business for quite a while in agreement with Claude. Unfortunately, I haven't been there for the journey with him. But yeah, look, this potentially provides an opportunity for people like Claude who have a longer term time frame on a pullback like this. As for an exact price, again, you have to sort of crunch your own numbers and get some comfort over that longer term. But let's say hold for the program.
Yeah, I've got to say, when I think of Claude Walker, I always think of Pro Medicus. That's a stock that is stuck in my mind because he's been on it for so long, as I've known him for. And well, there you go, it's a hold. He's sticking with it.
It was nice he also gave us a question to ask the CEO, so thanks, Claude. Sam answered your question. His answer was no, though, and that was about whether or not they're losing any contracts. All right, let's have a look at the market leaders. Liontown Resources, I mean, we just talked about the pickup that you saw in lithium and nickel today on the back of that, I guess, government support. Pilbara Minerals, Nickel Industries, all looking good as well today.
Yeah, just to clarify that, so those nickel companies in particular can access essentially billions of dollars in government funding, given that they've now been put on the government's critical minerals list. Just as far as those that have gone in the wrong direction, Neuren Pharmaceuticals. Now, this is off the back of a short selling report, in fact, with its drug licensing partner in the States, and as a result, shares absolutely hammered today. We also spoke of Ingham's. We spoke to them, but all about their guidance going forward, which they expect to have lower incomes there. Pro Medicus, which we've spoken of, Data and Domain, rolling those out at the end.
All right, to the small end of town, when we look at the winners today, Articore looking quite good, American Rare Earths, Novanix, Lindian Resources, and Altec Bat all had a very good day.
Whereas on the naughty list as such, Symbio, Visan, Helios Genix, and Santana Minerals.
Gosh, if we're loopy today, imagine how loopy Shane and I are going to be next Friday when we're both about to see Tay-Tay. All right, let's have a look at what's on overnight though, because there's a whole week to happen before then. US core PPI data, Michael Barr from the Fed is speaking, and San Fran Fed President Mary Daly. I mean, the market always really listens when she speaks, so that'll be one for investors to watch as well.
Yep, and just in terms of what we can expect locally, and yeah, look, the reporting season continues. A2 Milk, Ampol, Cochlear among them. Some of the biggies, BHP, the biggest of them all, of course, Ansell, Hub 24, Rio Tinto also, Domino's, which has been under significant pressure. Be interesting to hear from them. Woolies, the supermarkets, of course, in focus at the moment. Fortescue, another big miner, and Tabcorp, 9, Brambles, Block, and Bapcor.
Yeah, I mean, next week it really just is the biggest week of the reporting calendar. We will bring it all to you, of course, on ausbiz. But a quick check of where we've finished today's market session. Up 0.7%, I think, something like that.
Yeah, 0.75%.
And
on the COB.
yeah, the ASX 200, 51 points, 0.7%, 7,657, above its 20-day moving average. Over the course of the week, though, virtually unchanged, but still a win is a win for today, and we'll bring you, of course, all the latest from the overseas market action on Monday morning, bright and early, 10 a.m. Eastern.
Absolutely, we'll be here. I know, Juliet, over the weekend you're going to be prepping for Tay-Tay, so good luck with that.
I'm going to be making bracelets with my nieces, but I think I'm the biggest 14-year-old out of everyone. All right, we'll see you on Monday.
Have a good weekend.